Hey guys, Jason with Jenkins Risk Management. Gonna give you a global macro update. I just did oil pretty in depth, and I won't go through our top down. I just want to hit on some of the key markets, whether we're bullish or bearish, and how we like being positioned. So here's the dollar. You start with the dollar, you get a lot of things right on the dollar. You're gonna get a lot of other trades right. You're gonna get the direction of a lot of other things right. Everything's connected in global macro, but obviously the dollar is the world's reserve currency. Everything's priced in dollars pretty much. So as I mean this the long-term bull market in the dollar started back in 2014 and we're still been in this long-term uptrend now. Really since the beginning of the year this has been one massive monthly cycle lower. And let me just show you, it's very simple but very overlooked. We can see here. Just a second, guys. I gotta reshare my screen, I guess. All right, give me 1 second. All right, so when I jump between screens, I gotta reshare it to get the drawing tool out. So look, guys. So here's the breakout above these highs here in 2014. This coincided obviously with the massive move in the euro on the downside. Dollar yen started to break out prior to this, but the dollar index here is clearly gone in an uptrend. You can see the bands are all rising, the wave formation. So here's the higher lows. So by definition, uptrends make higher highs and higher lows. Still looking for a higher low here in this general vicinity. So the lows from last year, all right, but look at this monthly cycle. Every time we've had a cross, you've had to move up. Okay, crossed, we had to move down, move up. Crossed, we basically went sideways to down. All right, so we've been in this down cycle since the beginning of the year, and this, look how low this reading is, guys. You guys know percent D is what we want to watch, or below 4. So if you've been long euros, you better be reversing that and or getting flat. All right, so we're looking for a dollar bounce here, and maybe you'll push and stop out the lows here, but even at the bands, this is kind of where I want to start to work a long-term longs in the dollar. And as soon as this turns up, there's no reason to think we can't be in another long-term cycle move higher. So we like the dollar back here. We've been working core short on the euro. Let's talk about the euro. Now, we tend to stick mostly to the charts, the price action, and the cycles. Now, if you want to talk global macro for a second, no doubt inflation's been rolling over since the first quarter. And you've seen bond yields come down, you've seen the dollar come down, you've seen the Fed kind of realizing that also, okay? And you've had this dollar move lower. Now don't forget though, inflation has been rolling over in Europe, and you're actually starting to see some of the longer term data, and if you're mapping the cycle there, that's starting to roll over as well. So I tend to think that's going to be your catalyst. You can see that the DAX been rolling over also. The more that European stocks come under pressure, the more the data slows, the more growth slows. If inflation keeps coming down, Draghi's going to pivot back dovish. That can easily be your catalyst to get the euro back down. So we've been playing a short into this area. We've been saying you have to be patient because of the monthly cycle hasn't crossed, but I think we're close. So 119, it didn't really feel good. But again, we were early. So just this week did we really start getting aggressive. We put out a sell signal to double your core short position yesterday, or not yesterday, Tuesday was it? Tuesday or Wednesday? Tuesday. Or maybe this was Wednesday. You guys, it was right in here. We happened to be doing our live session, and boom, we got the follow through. So on the weekly level, this has been the area to be long-term short. This is what's kind of holding this trend longer term. The weekly, 200 on the weeklies here, like being short the euro. The intermediate term's rolling over as well. So we like a lot of the long, we like the a lot of the other pairs that are long dollar. We've been trading that from the dollar Swissy from the long side. I had a good call to buy yesterday, took some off today, but we're going to continue to buy dips and add to a core long position. Dollar Swissy held the 200 our pie line on the weekly level, so we had a nice pie cycle into that area, and then we bounced. Not surprised at all. And it's the same kind of the same thing across. Dollar CAD held its 200 week. It's hard to see with our signals on here, but you basically held the lows from last year. So we're getting more bearish to euro and more bullish to dollar. I did oil already. Gold. The thing with gold is that as rates reach the low end, 10-year yields, for example, reach the low end of their range or become oversold, overbought in price, you expect to see gold to move to the top end of the range, and that's what's happened. So at these levels, I'd rather be leaning short around 1300, but when you get to the bottom of the range, we like being long gold versus our long dollar positions as well. So we've been pretty flat just watching this. If I had to be one way, I'd rather be short there. Why don't we do treasuries and stocks? Been liking, let me get rid of these signals. We've been playing this on the short side, so as 10s get back to the top end of the range up here and yields reach the bottom of their range in yield, we want to be a seller. So we're running a course short, continue to like selling up here. And then we've been playing fives against that. So when we get oversold in the 5-year sector, we buy a few fives against our short 10-year position. That's essentially just a steepener. And we're trading both of those around directionally. So this is kind of a boring trade, but I want to be short into these tops of these levels up here. Obviously, any type of saber rattling, that's been kind of keeping the long end bid. We haven't been shorting that, just playing 10s short. But you can see how all these bands here are laying on top of each other. That's indicative of a range trade. So treasuries have been kind of boring. We look at the NASDAQ. We have a big spike in the VIX. That was all the headlines yesterday. And not surprised to have an up day in the VIX. I mean, we had this grind higher where tech was down one day in this entire move. So the fact that we're retracing, we talked about it today. We bought a few calls. So if we bounce, great, we'll make some money. If we don't, we're going to pick up futures lower. So we wanted to just buy some calls. It didn't have as much delta if we drop. And then this is the area we're kind of eyeing, 57.30 in the NASDAQ. And you can see here this daily cycle may want to come back down lower. So still overall bullish on the NASDAQ. We have been all year. Really since Trump got elected and the growth data started to turn, tech's been one of the best places to be. So we've just been doing our timing thing there. And you want to be a buyer again should we see these levels here. And the only thing that would make us bearish longer term would be if we break these lows and or we start to see the growth, the data in the economy really start to roll over, and that's not the case. If you're looking on a cyclical basis, year over year, the data is not rolling over, so growth is still fine. All right, guys, hope that's a pretty good update. I'll leave it at that, and talk to some of you in the morning.